I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. Victor, welcome back to the show.
Thanks, Jim. Good to be here.
Victor, you actively trade on a number of different areas, but before we start asking you about different markets, what kind of time frame do you use for the trading that you do?
Well, actually, that's a really key question, Jim. What I'm going to talk about with you here today is what I would call my term trading, and I do that in the futures and options markets. I am not a day trader. In other words, I don't put a position on with the expectation of taking it off that day. Sometimes that'll happen, and that's almost always going to be, it's a losing trade. I put it on, it's not working, and I just say, oh, okay, get out of it. And maybe that would shine a little light on what I think about my trading accounts. So for me, the money that I've got in my trading account is my core position. In other words, I'm happy to go to the sidelines, as it were, have no position in any market and just have cash in my account. I don't necessarily always have positions, or I certainly don't have a portfolio of positions in my account. I'm happy to sit in cash. I see something I like, I take a position, and then I take it off. Win, lose, or draw, move on to the next thing. So in terms of timing, I probably a few days to a few weeks. Sometimes if I get something that's working, I'll stay with it longer, try to add to the position if I can. Like a lot of people that I know that trade the markets that I trade, the futures and options markets, I understand when I look at my trading record, I'm wrong a lot. I mean, easily half the trades that I put on lose money. And I know that going in, so no particular trade becomes a darling, like I know this is going to work or something like that. It's just a trade. I put it on. I'm prepared for it to be wrong. So for me, because I'm trading price, I'm trading market action, not my version of what I think the story is or what I believe. I'm just trading price. So if I buy something, before I buy it, I'm looking at where am I going to get out of this if I'm wrong? And I want to see what my risk is. And I go, I don't want to risk that much. So that's kind of the thinking that I have when I do my trading. Certainly I'm looking at market psychology, what I'd call positioning risk, and that sort of thing. But, I'm going to be very careful. Let's put it this way. I think the brain wave that I have about should I buy the Canadian dollar or sell it is much less important than how I manage the risk of the trade once I have it on, in terms of, over a period of time, whether I make money or not. So, that's kind of a long-winded answer to what my time frame is, but those other things I think are equally important as to the time frame. And so here's the final point on time frame, I guess. If I kind of think that there is a really bullish story about something that will unfold over the next couple of years, that is useless information to me with the short-term trading that I do. Probably even dangerous, because I'll buy something thinking, oh, this is going to go up. I just know it over the next couple of years, and then hang on to it while it goes down for the next 2 months, and I'm losing money and losing sleep.
So when you set a bailout point, do you preset it saying if it goes down more than 10%, I'm out of here? And that's
I would not risk 10% of my trading capital on any one brainwave. For me, risking 2 or 3% or something like that, I'm wrong. I'm out.
And on that particular trade, though, do you look at the numbers for that one item and say, oh, it's down 5%, time to bail, down 10%, or do you have to judge each stock on its own merit?
Well, again, I'm trading futures and options and not stocks, or I'll trade baskets of stocks with the futures contracts. Before I put a position on in the market, I need to know where I'm going to get out if I'm wrong. I don't need to know where I'm going to get out if I'm right. I mean, I have an idea that I think if I buy something here, it could go to, such and such a level above here. But that's less important to me, trying to just sit with your winners. You never know how far they're going to go. But I definitely don't want to sit with a loser. So before I put the trade on, I'm going to want to know where I get out. And almost all of the time, let's say I buy a market, I'm going to have a sell stop in there below the market. And then, if in the middle of the night I'm asleep, the market trades down through that level, I'm out.
We'll have more with Victor Adair right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're speaking with Victor Adair. Victor, the last time you and I talked, you were talking about the U.S. dollar and were quite bullish on it and therefore short on some other currencies. Where do you stand now?
I've changed my mind. Short answer. The U.S. dollar made a 14-year high in January this year. It slumped off about 12%, made a very important low on September the 8th, a date that I call a key turn date. And it's rallied about 5% from there. Going back a few years, back to, let's say, 2011, 2012, and certainly 14, I was trading the U.S. dollar from the long side and doing well. So I understand that when you've made money doing something, you kind of you want to keep doing that particular trade. So I've had a bullish view on the U.S. dollar by and large for the past several years. For a good part of this year, I was waiting for an opportunity to buy it or get short other currencies, and I saw that recently on that turn date on the September the 8th. But I guess some time went by. I'd say maybe less than 2 months for sure. And I started questioning the trade, and the way I'd executed that was I was short the Canadian dollar and I was short the euro. And I just got out of those positions, and I was out of them for the last couple of weeks or so. And just here a day or so ago, I got back toe in the water, really, short the Canadian dollar. So that's where I'm at on the U.S. dollar versus the other currencies.
Could you expand on what you mean by a key turn date and why that's important?
Yeah, actually, key turn date. I mean, there's been a number of them that I've seen over the years, but basically it would be this. It'd be a date or, a day or two, one way or the other, where a number of markets all change direction. And September the 8th of this year, go across some of the hundreds of markets that I look at, and there was a lot of markets that pivoted on that date. And I think that the very key market that pivoted there was the U.S. Treasury 2-year note yield. In other words, leading up to September the 8th, U.S. interest rates were going down, and then on September 8th, they pivoted and have done nothing but go up since then, and where U.S. interest rates go just affects everything.
Going on currencies here, I've noticed on BNN television that before they used to list the Canadian dollar, the euro, and the British pound. Now the pound has been replaced by the yen on their little crawl that goes down the side of the screen. Why do you think they made the switch from the pound to the yen?
Probably in the global picture of things, the Japanese yen's just more important than the pound is. God bless the Brits. They ruled the world at one time, and not so much anymore. I think maybe in the aggregate of what currencies are traded in the world, certainly the U.S. dollar against the euro is the most commonly traded. Then after that, I guess, would be U.S. yen. If we weren't in Canada, by the way, you wouldn't even see the Canadian dollar on the screen because it doesn't register in terms of, the leading currencies in the world that trade. Well, that's not quite fair. We're probably in the top 10, but that's probably why they would have made that switch.
Interest rates are obviously important to currencies, stocks, commodities, and real estate. What do you see happening with interest rates?
Boy, I'll tell you, that is the $64 question. In some respects, we've had a 35-year bull market in bonds. In other words, since the time of Paul Volcker and Ronald Reagan, American interest rates have more or less gone steadily lower and lower and lower. We hit a 5,000-year low in interest rates last year around the time of Brexit. That may have been the turn. I tell you what, when I said earlier, I try not to get too caught up in stories with the trading I do. I just try to trade price. And part of that is there's lots and lots of really, really smart people in the world who have their views on the market. And I kind of take it as a given that their thinking, the action that they take based on the thinking is going to show up in the price action in the market. So I try to trade that from a short-term point of view. I can see the story that says interest rates will go lower because there's these deflationary pressures from demographics and globalization and technology and so on. And I can also see the other side of the story that says interest rates are going to go a lot higher because at some point people are going to wake up and realize that they're not going to get fairly repaid, for the money that they loaned. Those are big picture things. I try not to let, it's entertaining, but I try not to let that, come to bear on the short-term trading that I do.
The U.S. Fed, of course, very slow to raise interest rates. Every year now it seems, we're going to raise interest rates 3 or 4 times, and lucky if you see one. Do you think they do that to try to stimulate the market?
Yeah, I guess our question is, why does the Federal Reserve do what they do? Well, one of the things that they do is they have been raising interest rates while other countries, save Canada and the UK, who've raised rates. Everybody else is sort of sitting on their hands. So that's one of the things that's contributed to a stronger dollar. Why are they raising? I mean, rates are incredibly low to where they've been over any, a historical framework. So maybe they're trying to get rates back to a more reasonable level. Certainly they have caused with the unemployment rate where it is, that sort of thing, that they think the economy is strong. Maybe they're just trying to get some bullets, in case they need to lower interest rates at some point in the future when the economic circumstances say they should lower rates. And there's another story, and this is one that gets really interesting. Financial conditions in the United States are really easy. And part of that is because they've been printing so much money over the years and pushed so much liquidity into the system. Maybe, the Fed at some level is worried that asset prices are too high. In other words, stocks, real estate, what have you. And they kind of want to damper that down a little bit so it doesn't get too goofy. Maybe they're worried about the widening, call it inequality of who's got the money in the country. Maybe that's a concern. I don't know. What I do see is the market makes bets on whether or not they're going to raise rates, and those bets are important relative to what they're going to do compared to other countries.
Stock markets around the world have been making all-time highs. Some people have warned that stocks are way too high and people should be careful, maybe take some cash off the table. Do you agree?
Yeah, I mean, it's really tempting to think, man, is this ever goofy? Everybody wants to be a contrarian, right? Nobody wants to say, oh, hey, I run with the herd. But that's like everybody says I'm better than an average driver. It couldn't possibly be true. I mean, valuations are rich. I understand the arguments that people as sophisticated as say, David Rosenberg can make, where he says that a good part of the rise in price of the stocks has just been a multiple expansion. In other words, people are willing to pay more for the same dollar of earnings, and that's what's driven stocks higher, and at some point that comes to an end. just in the very recent past, the past week or so, markets seem a little jittery. The stock markets, I mean, we've had the Nikkei had a pretty active day Thursday of last week. Some of the broader indices, particularly the smaller cap indices, are trailing off. Even the S&P itself is having some looks like it's being offered a little bit. We got a concentration in a handful of stocks. I'm skeptical by nature, but I'll tell you something, this market just keeps getting a bid, and it may be just as, as grossly simple as there's no place else for the money to go. So it keeps coming to the stock market. I would not go out and bet the ranch on and being short the stock market, hoping that it's going to crash. It just doesn't, that's not a prudent trading idea.
We'll have more with Victor Adair right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Victor Adair. Victor, gold often moves opposite to the U.S. dollar. Is that currently the case, or are there other factors impacting the gold market at this time?
Oh, you kind of hit the nail on the head. Usually gold, as it's priced in U.S. dollars, which is how we mostly see it, it moves opposite of the U.S. dollar. So if we've got an environment where the U.S. dollar is rising, most of the time gold is not rising in that environment. Another main component to gold pricing is real interest rates. So if real interest rates, in other words, the nominal rate minus the inflation rate, if real interest rates are going up, and the U.S. dollar is going up, then that's a real tough environment for gold to be in. Geopolitical risks, if there's tensions in the world that somebody's going to be getting into a fight with somebody else, that is often a factor in the gold market. If you get a real scare, maybe you can put $50 or $100 on the gold price. I've traded gold from the long side and the short side this year. I've traded gold a lot for over 40 years or so. It's been stuck in a pretty narrow range here for the past month or so, either side of, say, 1280. And you go back a little further, for the past 4 years, it's been in about a $250 range, kind of, going broadly sideways. Gold is down huge compared to the stock markets. Like, gosh, I can see it in somebody's mind where they'd say, what do you want to buy gold for? You buy stocks, they go up, gold doesn't go anywhere. So, maybe that's setting it up for this would be a good time to be buying gold. I do see, and here's something that's always intriguing to me. You look at the backstory, as it were. The trading volume in the COMEX, in the futures markets, is way up this year. And yet prices aren't going anywhere. It's like it's just churning, So there's obviously a lot of interest there. But, sorry, to get back to your question, yes, the U.S. dollar is really important to the gold price, as is real interest rates, and, lately, we're just going sideways.
Copper prices hit a 3-year high last month, up over 50% from last year's lows. Some people are predicting much higher prices ahead for copper because of electric vehicle demand. Are you bullish on copper?
That's a good question. You're absolutely right. The big bull story, I guess, for copper would be we're going to have a demand for copper for all these electric vehicles and the infrastructure, charging stations and all that sort of thing. And then there's just electrification. There's, a billion people or something out there in the world that don't have electricity, and, they're going to get wired up. Am I bullish or bearish on copper? I'll tell you, copper's a little weird, and the thing that's weird about it is I'm not exactly sure that we're trading the metal with copper. Copper is traded in China, and that's a different world over there in the way they trade it. In other words, I'm going to be colloquial, and somebody will kill me for this, but you can borrow some copper. Yeah, I should say, you've got some copper, you can borrow money against it, from 6 different people. So copper becomes kind of a financial tool in China, and I wonder if we've seen Chinese markets get, really get ramped up in a hurry, and then when things run into trouble and they fall off in a hurry, in other words, real wild speculative swings, I wonder if that's affecting copper. I mean, I see the longer-term bullish argument for copper demand. And you can't, turn a copper mine on, in 10 minutes. It's a long lead time. Although I do notice what we call the forward strip in copper prices, it doesn't look as though the copper market right at the moment is particularly anticipating there's going to be a big demand. In other words, the forward prices are higher than the front prices. When you get a market that gets really bullish, the front months start to get a premium to the back months. So actually I'm considering that as a way to play copper. If I was to get bullish on copper, I might just do some copper spreads. I would buy the front months and sell the backs.
Crude prices hit a 2-year high this week at $58 a barrel. That's an increase of $16 or 38% from the $42 low we saw in June. OPEC and some non-OPEC countries have been cutting back on their production, and there's talk that it could extend those cutbacks when they meet up in Vienna at the end of the month. Are you bullish on crude?
No, I'm short crude right now. I've mostly traded crude from the short side the past 3 years or so. I'd say for the past couple of months I've had no position on, and I've just, watched this market rally from, call it below $50 up to $58. And just waited, and I thought that one of the things that was driving prices higher here was that people were buying into the story that the production cutback agreements between OPEC and some non-OPEC countries was working. That the inventory of crude around the world was shrinking, demand was rising, supply was down, so voila, we get higher prices. And you could certainly see that there was a surge of buying in the futures markets, open interest at new all-time highs, speculators building a really bullish position. And then we had maybe the cherry on top with we're not going to call it a coup, in Saudi, but let's say where MBS just kind of tightened his grip on power. How about that? And that gave us another maybe $3 from 55 up to 58 or so. I think if we get this market solidly back below $55 on the front month, that prices could go lower. And as a speculator, I got short earlier this week, and I'd just throw in the towel, say I'm wrong, if we make new highs here again. But if we start to press lower, I'm going to try to add to my position. I think there's just a lot of crude out there relative to demand, and that's the way I'm willing to play the market.
Now, something I'm curious about, usually the Canadian dollar rode along with the price of crude. When crude went down, the Canadian dollar went down. Then they increased increased the interest rate in Canada, which brought the dollar up. But since then, crude prices have been going up, yet the dollar's been going down. Why is that?
Jim, that's an excellent question. So here's the thing. In the markets, and certainly in the markets that I trade, when you notice a relationship, X happens and then Y follows suit. X happens, Y follows suit again. You go, hey, this is great. You wait for X to happen, you go by Y, and then the relationship doesn't work. Relationships change. I'd say in order of importance, the most important thing to the relative value of the Canadian dollar, and lots of times I'll talk to people and say it's not about the Canadian dollar or, about Trudeau wearing funny socks or something. It is about the U.S. dollar. The relative strength of the U.S. dollar is the most important factor in determining the value of the Canadian dollar. Sort of tied with that, or just after that, is the relative interest rates. Back in, May of this year, when the Canadian dollar was down around, 72 cents, thereabouts, the 2-year spread, interest rates between Canada and the United States, there's over 65 points premium, United States. And then we got into June, and we had the Bank of Canada very publicly signal a change of heart. And all of a sudden, our short-term rates started to rise, and the Canadian dollar rose with that. when we got to that key turn date I mentioned earlier, September the 8th, the rates were 25 points premium Canada. And since then, as Canada has backed away, and as the Bank of Canada seems to have backed away from, like, gee, what do we do here? You know, we talked this market up way too far too fast. We've had the rates fall back to negative 20 points. In other words, American rates are 20 points more valuable than Canada. So WTI was maybe in third place, well back of relative strength of the U.S. dollar and the interest rate spread. And you're absolutely right. It's like Canada never heard of crude oil the last 2 months or so. So the relationship will change, and I think it might get really interesting here. Right now, I've got basically two positions on. I'm short Canada, and I'm short crude. Now, this is the big if, but if crude was to drop back below $50, then I think that would really start to show up on the screens of anybody that's trading Canada.
Victor, before we wrap up, is there anything we missed that you think people should know about?
Do we have a couple hours? I mean, there's so many things. I mean, NAFTA renegotiations just started again today. That could be big. I see lumber traded over $500 today for the first time ever. I know we don't have 2 hours. We got a minute. I'd say here would be my key message on that. And there's a line from an old Western movie. The guy says, "Hey, it's quiet out there, Durango. Too quiet." What could possibly go wrong? To me, that's when I look at these markets, volatility is so low. It seems like complacency there. All you need to do to make money is just go buy stuff and it goes up. There's so much debt. There's so much leverage. We are going to have a big change going into next year. This year, central banks collectively, and let's leave China out of the picture because God knows how much they printed, but the leading Western and Japanese central banks have printed more money than ever. And next year, they're actually going to be a net draw down. So maybe that disappearing liquidity will have a big impact on markets. But whatever, it just seems like it's real quiet out there in the markets, lack of volatility and so on. And you just kind of have a sense that ain't going to last.
Victor, thank you so much for chatting with us.
Jim, it's been a pleasure.
My guest has been Victor Adair, co-founder of the Polar Futures Group. He's a senior vice president and derivatives portfolio manager at PI Financial in Vancouver. His website, polarfuturesgroup.com. You're listening to HowStreet.com radio. Questions for the show or our guests can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.